After the Trump administration's success in signing a new NAFTA, there is little prospect for U.S.-China talks to restart as tensions escalate between the trading partners. RT's Sarah Montez de Oca has the details. And Sarah, I guess the Chinese don't feel so fortunate right now.
Not at this point, Scotty. We haven't heard much from China since the new trade deal between the U.S., Canada, and Mexico was signed. But experts are claiming that this does nothing for the trade war between China and the U.S. Now, the troubled relations between the two countries don't seem to be going away. Recently, Trump hit China with $200 billion in tariffs for Chinese goods. Beijing struck back with tariffs of their own. They retaliated and hit American imports with $60 billion. The two countries had previously raised duties on $50 billion of each other's goods. Now, we're already seeing China's economy hurting. Chinese manufacturing is under serious pressure and looks like it's already heading into a potential crisis. Chinese export orders are falling. They took a big hit in September. Now, this is the fastest hit that they've seen in over 2 years. One sector that could struggle more than the others is seafood. The U.S. relies on $3 billion worth of Chinese seafood. The U.S. prepared for the coming tariffs by stocking up on some Chinese seafood in advance, especially because China is the source of a lot of the seafood found in low-cost frozen products sold by discount stores such as Walmart. According to IHS Markit data, the U.S. bought 6% more frozen tilapia from China during the months of June and July of this year. This is in comparison to last year. Frozen tilapia is the biggest seafood import from the country. And China also hit back with a 25% tariff on U.S. seafood. Chinese imports account for 15 to 20% of U.S. lobsters. China imported more than 17.8 million pounds of lobsters from the U.S. in 2017. Now, this is an Asian delicacy. But with these large tariffs, China is now turning to Canada for lobster instead. And under the new USMCA deal, it could make it more difficult for members to make individual free trade deals with China. Meanwhile, Beijing remains defiant and plans to stimulate domestic demand in place of any trade blow. Now, although these tariffs aren't felt yet by consumers, that could change in the coming months. But Trump has no problem praising his recent trade deals as he praised the U.S. economy today.
We have the best economy in our history. Stock market today just hit another record high. We're looking at China and other countries, and we're straightening out some of these horrible deals that stole our wealth, stole our jobs, stole so much from us. Actually, in many ways, stole our dignity as a country.
Despite the trade war's impact on consumers, the markets still see the Chinese yuan strengthen among global reserve currencies. According to International Monetary Fund, it went up to 1.84% in the second quarter of this year, while the U.S. dollar decreased to 62.25%, its lowest percentage of global reserves since 2013. So, Scotty, Trump is committed to hammering down on China, but says it's just too soon to start talking about a deal.
For more on it is too soon to start talks about the tariffs and what the impact will be on China. However, we are going to turn to Richard Wolff, professor of economics emeritus at the University of Massachusetts Amherst and co-founder of Democracy at Work. Thanks for joining us, Professor Wolff.
Glad to be here.
So are the U.S. tariffs actually causing the weakening in the Chinese economy right now?
Well, they're not helping the Chinese. That's about all you can say at this point. It is an attack on China. If you are a country that takes the exports of China, like the United States does, in a significant quantity, and you suddenly erect a fence by the government hitting them with a tax, in the way that the tariff does, you're going to hurt their economy because they've been relying on exports. It is an attack on China. Everybody in this country, in America, better understand that. It is an attempt to break down the extraordinary success China has had over the last 25 years. It will not be soon forgotten that the effort of China to become a large, important, powerful country, which it has mostly already done, is now being the object of an attack by an older country that's been around, rich and powerful. The British tried to do that a couple of centuries ago. They tried to hold back the United States and Germany. It didn't work. In fact, in history, over and over again, the effort of a society to hold back the new and upcoming economy has been something they've come to rue and regret in the years ahead. We will see whether that happens with the United States. It is clear already that the Chinese are busily working around, finding substitutes. They will hurt a bit from this, but they will also learn a lot of lessons, much as the Canadians and the Mexicans will, in the longer run, move away from depending on the United States. That will be a much bigger effect than the little shenanigans, the little adjustments that this latest agreement achieved. What you're going to see is China, Mexico and Canada diversifying, making other partnerships with other countries because they can't rely on the United States the way they had been led to believe they could.
Well, that's the question right now, because here in the United States, are the tariffs that we're putting on China, are they sort of strengthening the U.S. economy? Today, President Trump touted how our markets are up, how other consumer confidence is up. So are the tariffs and this sort of strength in the leadership, is that actually kind of proving to help our U.S. economy, or is this just the natural flow of the dollar?
I think this is just more theater from Mr. Trump. Everyone who has ever studied the imposition of tariffs in this way knows that one of the first results, and you can already see it with the tariff that has been put on by Mr. Trump on steel and aluminum. The price of steel and the price of aluminum shot up as local companies, now protected by a tariff that makes imports expensive, take advantage of the situation and raise their prices. That's going to happen to all of the commodities that have been hit by tariffs. The Chinese goods won't come in, allowing the American competitors who couldn't compete successfully before to be able to have the American market to themselves, and they will raise prices. So we're going to see an acceleration in inflation in this country in the months and years ahead, and we'll see a big effort by Mr. Trump to find somebody else to blame for this rather than the tariffs, which are having precisely the effect that tariffs have always been understood to have.
Well, China has an upper hand that Canada and Mexico did not have in forcing President Trump to come to the table, even if they don't use it. Can we expect China to retaliate even further, besides just the cost of goods? And will they leverage their ownership of the U.S. debt, do you feel, in the future?
Yes, I think they are looking at all options. As Americans like to say, no option is off the table. China is the largest creditor of the United States. It's important that viewers understand that. The United States is the biggest debtor country in the world, and the Chinese are the biggest creditors of ours. They are the creditor, we are the debtor. Sure, they could cash in their credits. They have reasons not to do that in a rush because that could boomerang and hurt them. But it is one of the mechanisms they have. They can also make life very difficult for the huge number of American corporations that have opened operations in China. China is now the largest automobile market in the world. If they close that off to the General Motors and Ford and so forth, that's going to hurt way more than these tariffs do. So yes, they have a whole bevy of weapons, and if you keep attacking them, making it impossible for them to grow in the future the way they have in the last 25 years, you are, of course, incentivizing them to use the other weapons at their disposal. And then, especially with a volatile president like this, who knows what kind of sparks will lead to what?
Well, switching gears, Professor, Turkish President Erdogan on Monday was critical, as you know, of the United States sanctions and tariff against his country, claimed the U.S. is taking on global issues, not through traditional negotiations, but through what he called blackmail and threats. What do you make of Erdogan's criticism of the U.S. and his call for a boycott of the U.S. dollar?
Well, I think you're going to see more and more of it. I don't like Mr. Erdogan. I don't like his politics. I don't like what he has done in and to Turkey. But on this point, he's absolutely right. No negotiations. This is a president who threatens, who bullies, who blusters, who does what, by the way, conservatives used to say should never be done. The conservatives I grew up with told me that we should let the market decide. We should let Chinese and American companies compete. We shouldn't have the government come in. Instead, he's using the government as a club, and he's then surprised if other countries react. That's not surprising. It's what you should have expected.
Well, I expect you to join us again and continue on this subject. Thank you for joining us tonight, Professor Wolf.
Thank you.
Hey YouTube, thanks for checking out our channel. We hope you enjoyed the video. We have tons of content for you just like this. For more of RT America's one-of-a-kind news and analysis, be sure to subscribe and never stop questioning more.